Hi everyone and welcome to Buy Now Sell Now Weekend. I'm Avan Dabash.
Hi there, I'm Mekha Chadha and well, we've got a power-packed show lined up for you. So let's get you a quick glimpse of all that we'll be discussing over the next 30 minutes. We'll be taking on board your questions on MRF as well as Bosch India.
We also have our Portfolio Advisor segment, Keshav Singh's Portfolio. That's what we'll be discussing today. On the fundamental side today, joining in on the show, we have with us Avinash Gorakhshekhar, CIO and Head Research at Precision Investments. And on the technicals, we've got Rakesh Bansal, VP RK Global. Welcome, gentlemen, to Buy Now Sell Now Weekend. Today, we'll be addressing Rajiv Sharma's queries on the show. So let's get on board his first query for the day on MRF. Rajiv?
My name is Dr. Rajiv Sharma. I'm a resident of Hyderabad. I'm a doctor by profession. I'm holding 15 shares of MRF Tyres, bought at rupees 15,000 each. Should I add, hold or sell? My time horizon is 2 to 3 years.
All right, that's the question coming in on MRF. He did pick it up at a pretty okay price of about 15,000 rupees, more than doubled his investment clearly there. So he's firmly in the money. But if you just look at how the fundamentals are playing out, Avinash, for the tyre segment in the tyre space, we've seen rubber prices at multi-year lows. Do you think our viewer here can, make even more money from these levels on an MRF?
Yeah, I think, Megha, I think if we can give in a time horizon of at least a couple of years, I think MRF is one of those companies which has got a very strong presence in the truck as well as the passenger car segment. And more importantly, whatever, reduction we have been hearing on the rubber price front, plus the kind of, volume expansion both on the commercial vehicle side as well as the passenger car side, I would not be surprised that giving it a slightly longer period, despite the fact that MRF has come off a high of more than 40,000 rupees, if he can hold on for maybe, 18 to 24 month kind of horizon, he can definitely expect a decent price. Our sense is, a price target of around 37,000 looks possible. I think probably over the next 18 to 24 months. So he should hold on. I don't think he should book out, this early.
There you have it, a call coming in on the fundamental side, a keeper for the long haul. It's really reaped you some good returns already, so 37,000 rupees. But of course, patience is a virtue, as you've been seeing with your investment so far. So expect that kind of a target within the next 18 months or so. Let's get in a view on the technical charts as well. And Rakesh, it's been pretty encouraging for the likes of an MRF, while some of the other 5-digit stocks have lost their sheen, the likes of Page Industries. MRF has managed to stand the test of time. What's the call on how the investment is likely to shape up in the long haul, according to you?
Well, I'll say he should clearly hold the MRF position, and on declines to around 30,000, 31,000, if he feels he can buy more, I feel the kind of time horizon he is having, like 2 to 3 years, he has already doubled his investment. I feel it has the potential to triple also. I feel in next 2 to 3 years, MRF can easily rally to levels of around 44,000 on the upside. He should clearly hold and add more on declines to around 30,000 levels.
Okay, that's the call coming in on MRF. Both our experts are suggesting that you hold on to this investment, and technically, Rakesh is seeing a target of almost 44,000 rupees. Well, let's move away from that and take on board the next question for the day, which is coming in on Bosch India.
I'm holding 50 shares of Bosch, bought at rupees 23,400. Should I add, buy or hold? My time horizon is 2 years.
Okay, let's discuss Bosch India and get in a view as to how exactly he should be approaching this investment. Versus at a fairly high price of around 24,000 rupees, the stock is currently languishing at levels of about 16,800 odd. In the last 1 month also, on account of the kind of volatility we've witnessed for the markets, it's come off by about 6% or so. Fundamentally, this seems like a good stock to keep, but Avinash, it hasn't reaped Rajiv many, returns in the long haul so far. Do you think that he should, book partial losses as of now? And what would be the advice?
I think, Avan, if you look at Bosch, we all know that it is a MNC counter. More importantly, has a debt-free balance sheet. Although, the investor here has purchased it at the higher end of the price, My advice would be that if he has a 2 to 3 year kind of horizon, he should actually average the stock at the current level. And mind you, I mean, Bosch is a very strong auto component player servicing the commercial vehicle, the tractor as well as the passenger car segments for their CRDI engines. So, technology apart, they have a very strong global parent. Also, there are possibilities that going forward, Bosch might even consider delisting the stock from the Indian markets. But given the kind of business model also which they control and they manage, and the market shares which they control, I would presume that over the next 2 years, I mean, he could get a decent upside. Obviously, the tractor and the commercial vehicle segments have to grow at a healthy pace. The tractor segment has underperformed. That is the reason we have seen pretty softer numbers coming from Bosch. But overall, long-term prospects remain good. I would prefer to hold and would give the same advice to the investor, saying that probably in the next 2 years he could get a price target around 25-26,000. So use the current downfall to average and actually bring down your cost.
25 to 26,000 could be seen for Bosch India, but that's for the long term. But Avinash, of course, is advising that you try to get your initial buy price lower. Let's talk technicals as well then, Rakesh. What are you seeing on the charts for Bosch India? How do the long term charts here look?
Like long-term charts are positive, but the irony is that the purchase price is too high. As he asked, like he should hold, and he must average on declines to around 15,500 to 15,800, which is a good support. At around these levels on declines, he should average, and I feel in next 2 years we might see a level of around 24,800 on the upside.
Okay, there you have it. That's the call coming in on how one should be approaching Bosch on a fundamental as well as from a technical standpoint. Would be important to maintain a target of about 24,800. But nonetheless, you should look to buy more of the stock on declines. I hope you took note of that advice and we were able to help you out. We take a quick break right here on the show. Do stay with us. On the other side, we've got Keshav Singh's portfolio that we will be discussing.
Thanks so much for staying on with us right here on BNSN Weekend.
Well, we've got our portfolio advisor segment lined up. Let's get straight to it. Keshav Singh has sent in his portfolio. Let's quickly walk you through his profile. He's 33 years old. He's an IT professional and has a short-term time horizon. Let's find out the stock he holds. Start off then with Ashok Leyland. He's got close to 800 shares at 57.9. Axis Bank, he's got a bunch of 200 at 52.9 rupees. Great going so far. ICICI Bank 295 shares is what he's picked up at 27 rupees. Moving on then to GMR Infra, 15 rupees is where he's got 6,000 shares, pardon me. NVCC close to 70 shares at 650 bucks. 800 shares of Syntex Industries, he's bought it at a price point of 98 rupees. Moving on then to Cap Goods, L&T features on the list, 46 shares at 1,543. Dish TV 2,000 shares at almost 79 rupees, and finally Gati, he's got 300 shares at 203 rupees. Well, so far it seems like all of those volatile names have been bringing him a little bit of pain, particularly from the infrastructure stroke real estate pocket. But let's nail it down to individual stock recommendations and what Avinash advises. Avinash, let's start off with the first three stocks. No complaints here whatsoever, I'd reckon. Ashok Leyland in the portfolio, ICICI Bank, and another marquee name from the banking space, ICICI Bank. What's the advice?
I think starting from Ashok Leyland, I think his buying price has been pretty attractive, and I think if you look at the long-term prospects, Ashok Leyland should do well even in the coming year. The Q3 numbers were extremely strong with a strong 200% jump in the profit. Looking at the kind of growth numbers in the CV space, I would presume that he should hold on. He should get a target price of around 105 here. As far as Axis Bank is concerned, again, one of the frontline players in the private banking space, and despite little bit of asset quality problems, the balance sheet definitely seems to be quite strong. And the kind of loan book growth the management has hinted, plus the kind of provisioning write-off which was taken in the third quarter, makes us feel that this could be a bank which could definitely take off once the macros improve. So here also he should hold on. We look at a target price of around 450 here. As far as ICICI Bank is concerned, I think this was one of the private sector banks which took a large write-off in Q3, but definitely the longer term financials look pretty strong. And despite the fact that Q4 might be a little more volatile, the outlook for FY17 definitely looks good. And since his buying price is extremely low, I would presume that he should hold on for the next 12-15 months. He could look at a target price of at least 250 here.
All right, that's the call coming in on the first three stocks. Let's focus in on the infrastructure exposure then. There's GMR Infra picked up at 15.5, NBCC, that's of course working out well for him. And there's also Syntex Industries where he's lost about a quarter of his investment, Avinash.
I think talking about NBCC, I think he should hold on. This is one stock which has delivered extremely solid returns for investors. In fact, in terms of the positioning, NBCC currently has an order book in excess of 35,000 crores, has a very strong balance sheet. So here I would presume that if he can hold on and give some time over the next 12-15 months, he could get a good target price of around 1100. As far as GMR Infra is concerned, the stock has underperformed obviously because infrastructure has not done well. The company has a large debt on its balance sheet, but if you see the kind of initiatives the government has taken on the infra space plus the budget expectations for this sector, I would presume that he has to give in a little more time, probably a time period of 18 to 24 months. Probably then only he could get a target price of around close to 17, 18, which could possibly cover up his losses. As far as Syntex is concerned, again numbers have been pretty decent, Q3 as well as Q2, and I think clearly valuations look extremely attractive. So I would not be surprised that possibly some sort of re-rating could come in. We could look at a target price of around 110 to 115 here.
You have it. It's a thumbs up so far for some of those high beta stocks as well, according to Avinash that he's doled out. But let's also discuss then the last three recommendations. L&T, we're talking about future prospects of the cap goods space, perhaps not improving substantially. He's not making any money on that investment. Dish TV at about 78, and Gati, he's fetched it at a level of 203 almost.
Yeah, I think, Avan, if you talk about Larsen & Toubro, I think this cannot be a short-term call. One has to take a medium to long-term view here because Larsen & Toubro definitely, had a very challenging quarter in the Q2 as well as Q3. And Q4 might also be challenging, but if one looks at the India story, the kind of growth expected on infrastructure, defense, as well as the capital goods space, this is probably the best representative of the entire cap goods space as of now. I would presume that if he gives in a little more time, he should use the current downfall in the price to average his cost and actually wait for a time period of 12 to 18 months. He could get a target price of 1800 here. As far as Dish TV is concerned, again within the DTH space, this is one company which has now broken even, has started making good amount of money. The Q3 numbers were slightly disappointing from the subscriber addition point of view, but if you look at the overall big picture, I think definitely Dish TV is looking at expanding its market share quite significantly. So from a years down the line, I could possibly suggest to hold on and look at a target price of around 103. And as far as the last stock is concerned, Gati, I would say that Gati has really disappointed a lot of investors, extremely poor numbers, and probably my suggestion would be to exit at the current level. He could probably look at another logistics share, which is All Cargo, where I would presume it definitely should do well over the next 12 to 15 months, and where we have a target price of around 190.
All right, so there you have it, the recommendation coming through on the entire portfolio. But let me quickly revisit all that Avinash is advising. On in Ashok Leyland, he recommends that you stay put. Here you could move and see a level of about 105. Axis Bank is a whole call as well for a target of 450. Ditto is the case with the ICICI Bank, where Avinash expects that we could see a level of about 250 on the upside. Moving on to the infrastructure names then, there's GMR Infra that you can stay invested with for a target of 18 rupees. NBCC could be moving into 4 digits very soon, and 1100 is the target that Avinash has set out for this one. 150, that's the target coming through on Syntex Industries, and 1800 rupees is the target for a Larsen & Toubro. Well, you can stay put with the Dish TV as well. A target of 103 is on the cards here. And lastly, Gati can be replaced by an All Cargo instead, and you can expect a target for 190 rupees out here.
Okay, and a very important disclaimer that if you'll be taking any advice that's been given, you must consult your financial advisors. This is only a model portfolio that has been recommended. On that note, let's slip into a quick break. Stay with us. We've got some interesting stock ideas lined up on the other side. Welcome back. This is Buy Now Sell Now Weekend.
All right, and let's get talking about how the markets this past week have been and really what's expected next week. Of course, this week was not too bad, a bit choppy definitely, but 3% up on the index by the week's end. But importantly, next week is the follow-up to the budget. So, Rakesh, what's the sense you're getting, especially given the way the Nifty and the Sensex charts have played out the past 5 trading days?
Like, I feel like next week is not only the budget week, but also like it's a expiry week, and I feel like we are going to see a good rally. Nifty has made a good support at around on the downside, like 7125 appears a good support, and I feel Nifty is likely to demonstrate a good rally to around 7277 levels, and this rally can easily extend to levels of around 7300 beyond. Also, I feel by Friday, next Friday, we might see a level of 7305 on the upside. Markets are clearly on a buy on decline kind of a market, be it Nifty, be it Bank Nifty. Bank Nifty has also made a good support at lower levels, and I feel like one can buy Bank Nifty on the declines also. We might see a level of 14,700 on the upside on Bank Nifty.
Okay, that's a call on the frontline indices. Rakesh, let's try to understand what are the top technical calls you have for our viewers as well.
Like, my first call is a buy call on Tata Steel. Here the technical structure is clearly positive. Stock prices are making higher tops, higher bottoms. In fact, we have also witnessed a positive crossover on the momentum indicators. For next week, Tata Steel is an excellent technical buy with a stop loss at 238 levels for a target price of 272. And my second call is a buy call on Bank of Baroda. Like, among the PSU banking space, Bank of Baroda is having an excellent technical structure. Price volume action is very strong, and the kind of price volume action Bank of Baroda is having, I am getting a sense that we might see a big upside momentum in next 2 to 3 days. By Bank of Baroda, stop loss 126.50, target 155.
All right. Well, those are, the technical picks and technical calls coming in from Rakesh. And Avinash, let's talk about, some investment ideas, long-term theme that you're working with.
Megha, the first stock we would like to recommend viewers is a company called Capital First. We believe that within the NBFC space, Capital First is a very strong player in the SME and the MSME segment. In fact, the company reported very strong numbers in the Q3 which just concluded. The company posted a profit of almost 44 crores compared to 30 crores, and we believe that asset quality levels are probably the best in the industry with a just 0.1 to 0.2% at the net level. And clearly loan book growth as well as the disbursement growth has been very robust, around 25 to 30%. So clearly we believe that even in the current budget, hopefully the SME sector would be given some sort of a good fiscal boost. And looking at the kind of huge demand potential and the kind of positioning Capital First enjoys, our sense is over the next 12 months one could see a target price of around 460, 468.
Okay, that's the call coming in on the first stock, Avinash. What else looks good?
Avan, the second stock is a leading player in the microfinance space. We like SKS Microfinance. The company posted very strong numbers in Q3 with a strong 90% growth in profit. More importantly, the kind of growth potential in the microfinance space and the kind of strong balance sheet with SKS enjoys very low asset quality levels and very strong disbursements again coming in the last couple of quarters. Our sense is that this business has got a great potential to grow. In fact, the management commentary post the Q3 was extremely positive. They've said that over the next 2 years they would be growing by 70-80%, and most of this growth, almost 70%, would be coming from new client additions and the rest from the increase in the ticket size. So clearly, from a longer term perspective, this is a good stock to accumulate at the current level. Our sense is you could see a target of around 615 to 620 over the next 12 to 15 months.
Oh, so that's an SKS Micro for a target of 618 and a Capital First. That's looking good to Avinash. But with that, gentlemen, we are out of time on the show. Thank you so much for being with us. And we wrap it up right here on BNSL Weekend.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.